Hi, this is Charlie Aitken from investmentmatters.club. The investment markets overview for the weekend in 26th of April 2019 led with a brief comment about cryptocurrencies, observing that they'd had a very good bounce throughout April, including the largest by market cap, which I'll call the lead dog, Bitcoin. And as can be seen here, it had gone up best part of 40% until the final couple of days of last week, that is, when along with the complex it sold off on some rather concerning news, which you can read here. But before we talk about the future in respect of Bitcoin, let's have a look at what we were saying in our last update about it, which was the 27th of September 2018, by which time it had fallen all the way from best part of $20,000 down to $11,620. And for various reasons, we suspected there was still further downside and made the observation that there was a gap still open, and gaps do tend to get filled, which was down here within the target range of sort of $6,700 to $8,500. Furthermore, we went on to say that although it had been an absolute rout for the cryptocurrency complex year to date, as can be seen here, as of the end of September, Bitcoin had actually been one of the better performers, only falling by 56%, versus some of the others here, as you can see, of 84, 80%, really quite serious corrections. So either way, it's fair to say that it had been a crash. We went on to say in September, so what's next? And we brought up a typical chart that we use, which in this case was a weekly bar chart from May through till September. And we made the observations that what we didn't like about it, although there was the beginnings of a support shelf here at this sort of 6,000 level that we predicted in February time, a couple of things still worried us. One was that the moving averages, which is the 50-day moving average, this red one, and the 200-day moving average, which had been support for price on the way up here, was now becoming resistance because price had gone under the moving averages. And furthermore, there'd been what's known as a death cross, where the 50 had crossed through the 200-day, which normally is quite bearish. Furthermore, our color-coded panel, which provides signals of green when you should be buying the security because it's likely to go up, was in red, which is suggesting that we still feel that there's further downside that's there. Also, let's have a look what other observations we made there. Oh, that's right, yeah, we use Fibonacci tools consistently, and a projection tool which measures the distance of the first fall was actually projecting a target from that 6,000 odd down to about $3,500, another 45% fall, so it's quite a serious fall still likely to come from it. So let's see where we are now. So if we look here, we were saying that was at the end of September, so really we're now interested in what happens since that update. And here was this sort of support shelf where it looked at around about 6,400 or so. It was looking okay on one front. We warned about the pink color-coded signal, which suggested further downside, and also the moving average cross, although on here we're only showing the 200-day as opposed to the 50. And in the event, yes, it did fall, and it fell by 45%, which is what our projection was. Since when it's started to go the other way. So we had our first change of signal here to neutral, which would have still kept us out of it. And in fact, we wouldn't have invested back into it until we saw a change from a neutral signal to this green one, which is to suggest buy. So it would have got us in at around about $4,000, and you'd have enjoyed the ride up here to a good 50% to around about 5,500 before this brief sell-off at the end of the week. So again, the signal was getting you out, even though you didn't know the news at the time, the event that was going to cause it to correct a bit, which was referred to just now. Okay, so we've done pretty well over the past 12 months or so. So where are we going from here? Well, from an upside point of view, we could actually continue to use our Fibonacci tool, bring it across to where this low was, and that would suggest that there's still chance of a bounce up to this 38% retracement, which is around about the $9,300, or we could be going all the way up to 13,000 or so. However, we're still in this downtrend, and also, although we've broken through the 200-day moving average, which is a positive, what I don't like about it is, if we take it on out on a weekly basis, this shows the 200-day and the 50 moving average, and we're still in this death cross situation. So I wouldn't personally want to invest back into this until I saw the 50 cross back through the 200-day, and I would like to see a move back into a green signal, as opposed to a possible warning here that's saying we're neutral, and there are other things that we look at there. So bottom line is there could be more upside, but we're not going to go for it until we get this moving average cross, and also a change back to our green signal, which we, by the way, send out to our clients who subscribe for that particular service. On the negative side, we've still used Fibonacci here. Let me bring this more into date here. But instead of a retracement, we've now put on a projection level like we did back in February last year, and projected from 11,600 down to about the 6,000 level. If we do that again now, we can actually see there that although we'd achieved 3,500, we could actually be going all the way down to 1,700, which is another halving. In other words, a 50%, more than 50% move, because we're at 5,100. That's something like about a 60 or 70% fall. So the judge really is out. So sorry we can't be more, well, I say sorry, it's not really sorry, we're not making the play here because the charts aren't stacking up. We haven't got the signal from a color-coded point of view, and we haven't had the reverse of a death cross, which is called a golden cross, where the 50 goes back through the 200-day. And as mentioned, there are other things that concern us on momentum indicators, like the RSI here and the MACD, but we won't expand too much about that at the moment. But hopefully it's been of some use, and if you want a more regular update on this, then do contact us and find out what that service is and what the cost is. Until next time, goodbye for now.